Good morning. Happy Monday. Hope you had an amazing weekend. Took some time to have some fun. All right. Well, it started off to be a super volatile morning that the market's just been opened about an hour, not quite, but very close. And you can see here that the Dow was up here, up, right there, then went negative, then had some little swings, and now is at the low of the day thus far this morning, down 91 points, 89 points. The NASDAQ was bearish down here, that there was a number of technology stocks that on open were negative and then started rising, got to a high here and now has pulled back a little bit, but total opposite of the way the open was, just like the Dow, total opposite of the open. The S&P, you can see this first candle way down here and then rise and lots of swings. That's what creates these wicks, up and down, up and down. And now we are really dropping again. Big red candle here. Still positive, up $1. And the Russell, it was the high percent mover, had the biggest percent here. Was up, down a little bit, back and forth, and now is down here close to going negative. Not sure whether it will or if all of them will recover and inch their way higher. I thought that's one of the things we would look at today, but let's finish looking at the carpet here that you can see. It is a mixture of red and green, a few bright greens like Tesla and LLY and so on. But any of these dark ones that look like they're dark green, they are just barely negative, like Visa here, barely negative, kind of right at the zero line. And so there's not a whole lot of green there at the moment. And uh, there has been lots of swings, and that's part of what I wanted to share and talk about today. Is I'm going to come over here. This is the Dow, and this is a weekly chart. What that means is each candle is created by Monday through Friday price activity. So far for the Dow, we can see we're down $83. On the CCI, this is a very simple indicator for traders to be able, even if you're brand new. Excuse me, I'm going to get a. There we go. So the way that you use this, the way you read it, is this zero line, this dotted line that is here. That is the line between being bullish and the line being bearish. So you can look at a chart very quickly and say, is it above the zero line or is it below the zero line? If it's below the zero line, this is bearish. You can expect that there's going to be drops here, back and forth, at the zero line, trying to figure out. Then it rose. Now it has dropped a little bit. So that is where we are at the moment, where we were bullish here, rising, creating this green fin. Now we are slipping down and being bearish. So I can't remember if one of the last sessions I talked about this or not, but one of the things that you can see when you look at charts is the fact that you look at the candles here, and each one of these candles represents the price movement of a week. Sometimes the candles create patterns, and they're not perfect patterns. They are not candle here, candle there, matchy. perfect, but still what happens is you can look here and say, oh, look, this went up to this, and this was the high, and then it pulled back, and then you scoot a little farther and say, oh my word, look at that. Got right up here to that same line, that same high line, and then pulled back, kind of went flat here for a while, and then pulled back and went way, way back. Then look, back, come over here and say, look at that. It got up here to the same area, touched it, pulled back a little, touched it, pulled back a little. And so we're kind of right here where price is trying to decide what is going to happen next. And so there is a pattern called an inverted head and shoulders pattern. And that is where, if you think about this being the head, it is standing on its head. This is the left shoulder. Then this, kind of what's happening right here, is the right shoulder. So it is possible that this will drop a little bit more and then ultimately rise. It could just hang out here for a bit and go up and down, just be kind of flat. But it wouldn't be a surprise if there was a week that had a big red candle where there was a big drop and then it started to rise. If this plays out as this inverted head and shoulders, then because we're looking at a weekly chart where each candle is a week, likely there will be still some swings throughout the summer, up and down, and then ultimately this will rise and finally break above this line that has been more than a year. Look back here, into the end of 2024, where it kind of started. It will finally get up here to new highs. And with what's going on with tariffs and the economy and all of that, it almost makes sense to think that later this fall, maybe all of this tariff stuff will be over or settled, and that then there will be this rise. So because of all of this and what is taking place, often within my services and what I offer and what I talk about and what I share is the fact that it makes sense to step down in time and to trade shorter time frame charts, not where you are trading and it is going up and then down and then down and then up and then down and is flat. You want to be able to get into trades and benefit from the move. And so that is why a lot of my services trade, some of them that used to just trade during strong periods and just traded daily charts, now are trade 60-minute charts, 30-minute charts, and so that you can learn the patterns, get into trades that last a day or last 2 days, 3 days, whatever, and then switch and, excuse me, maybe go in the opposite direction for a couple days. So that is what I teach, and that is what my services are. All right, well, I'm going to go ahead and wrap this up. I hope you have a great day, and I'll chat with you next Monday. All right.